What's going on, everyone? So, back again. My name is Ethan. We're going live right now on Instagram. Going to show you guys a little bit about how I trade, what I'm doing on a day-to-day basis, what I'm just looking at, so you guys can get a good idea of how I do what I do, so you all can become self-sufficient traders to pursue that one goal that we all want, right? We all want to become rich. We all want money. And it's really not about how much money you make in a grand scheme of things. It's all about how much money you can keep and put into investments, just like this one here. This is a stock of AT&T. And if you make a lot of money in whatever job you do, whether you're making $50,000 or $250,000, doesn't really how much money you're making, but it does matter how much you're putting in assets that are growing for you. So we, as humans, have a tough time beating the one thing that takes away all of our money, which is inflation. So if you make a lot of money and say you make 250,000 or you make 50,000, whatever it is, you're going to lose a lot of that to inflation as time goes on. And one thing you can do is put it into assets to help you beat inflation. That's the whole reason why I created my book called Trading Around the Cycle, this one right here. And if you want to beat inflation, you have to put your money to work. And the good thing about this is that if you're putting your money to work for you, at one point it's going to be working harder for you than you are working for money, right? There's only so much time in the day. There's only so many hours in a day. And if you can find a way to have your money working for you during the hours that you're not working, you're winning. And if you can maximize that money, then you really have something going for you. So maybe you work at your job and you make $20 an hour, but you can find a way to make your money make you maybe $30 an hour. You don't actually have to work. Your money is substituting your income. And that's where we're all trying to get to. We all want to live a life where we don't have to work if we don't want to, or we can choose to work whenever we want to. And that's why I created this book, to show you guys what I'm doing every single day, why I look at my stocks over and over again. I look at about 100 or so every day. I never miss a day, and I always look at them because I'm waiting for the right times to buy in, because I want my money to be working hard for me, harder than I am. But it's not completely passive. So you do have to put in the work up front, and over time, it'll work for you. So now you have a job that makes you money, and you spend a lot of time at your job to make you money. And you want to put it to work, but you don't know what to put it into, and you don't know when to put it in it, right? So that's your next problem. So there's a few things that you can do to make a lot of money in life. You can create a business and maybe hire people to work for you so that they're making money for you, which is one of the fastest ways to make a lot of money if you know what you're doing. The second thing you can do is you own a lot of real estate, which each real estate business or property that you own is kind of a business in itself. If you have a duplex, and you have two renters in it, and something breaks or whatever, you have to repair that. And that property will cash flow you every single month as long as everything runs good. But when things don't run well, then you have to step in and you have to work for it. So it is a business, but real estate is another way to earn a lot of money over time. The second way is you own companies, right? So building companies is one, owning real estate is another, and actually physically buying into the companies themselves is the third option. Now, that one is the easiest, lowest barrier to entry, and we do that through what's called the stock market, which is what I'm showing you guys right now. So, if you bought into JP Morgan, and you bought into JP Morgan years ago, so you bought in 2003 or 2004, this is what the chart would look like, right? And maybe you buy in at the high here in, April of 2004. And to you, this seems like a very high price, and it goes down, and and you're worried about your money, it goes down a lot. Maybe it goes down by 50% in 2004. Not a good look for you, right? You just lost half of your money. But if you zoom out, you can see that 2004 is way back here, and you will have, at this point, over doubled your money. So 150% increase. So you can buy into companies that will hopefully increase over time. And if you don't know what companies to buy, you can actually just buy into the index itself. S&P 500, here you go. And you can see over time, if you hold your money in the stock market, it will eventually go up. You just have to be willing to spend time in the market to get there. So this is what I do on a day-to-day basis. I look through all my stocks and decide when a good time for me to buy in is. I hold it forever, and when things run up too high, that's when I trim. And if you look at a stock like AT&T, you can see that this is something that I probably would be trimming soon, right? It's at its highs. It keeps hitting this resistance level. RSI was hot at this price level earlier. This looks like something I would be trimming if I had a full position size in it, but I don't. So skipping ahead a little bit, but that is the basis of it. If you want to build wealth, if you have money and you want it to grow, owning stocks is the lowest barrier of entry. It is the easiest thing to do. You can do it from anywhere on a phone at a click of a button. And that's why it is the greatest wealth building tool that we have, because anyone can do it. Doesn't matter how much money you have either. You can do it for like $5 if you have it. So that is why I do what I do. And the next hardest thing to figure out is when to buy. Because of course you don't want to buy at the high, and it can be really difficult to figure out when you want to buy in, right? Like JP Morgan. Like we were just talking about, if you buy in 2004, like maybe that's the high, and you don't know if that's when you should buy right here. And it just keeps falling and falling and falling. Well, if you could travel through time and decide, hey, this is the low, I'm going to buy in here, then you'd be super, super rich. But no one has that ability. You can't do that. So what we do is we try to find patterns. And you try to look for things that indicate, okay, this may be the bottom. I want to buy here because that's a cheap price. And when it runs up to the top, then you say, hey, I want to sell there because that's a really high price. And sometimes it works and sometimes it doesn't. But there are people out there who spend all their time looking at charts. Maybe someone kind of like me. You and me, maybe. We look at charts and we can, use the prices to create these lines, these moving averages lines. And you can say, on a 5-day average, the price is lower than the average last 5 days. That's not a good sign. That looks like it's going down, right? And price is above the average of the last 20 days. That's a good sign. It means the price is moving higher, right? And maybe when the price gets towards this 200-day moving average, that's a really good indicator that price is on the rise. If it's going higher than the 200, that's a good sign. So there are ways you can decide that that a stock is undervalued, overvalued, or fair valued. And there's also people that are called analysts who go to very expensive business colleges and they get their masters in finance and they love to analyze stocks. And maybe these guys spend all day long looking at a few stocks, looking at their fundamentals, how much a company makes, their competitors, future projections on cash flow, all this really complicated things, and they come up with a fair price. And they say JP Morgan is fairly valued at $152. And that means that JP Morgan is trading at a very, very big discount. 152, about 35%, right? And look at that. It's kind of right by the 200-day moving average, and it's very near this resistance level right here at 157. So all of that to say, we're trying to find out when the best time to buy a stock is. And what I have learned through years and years and years of, studying and reading books and all this stuff is that stocks move in a pattern. Stocks can go up, they can go down, and they can go sideways. Those are the three directions that stocks can go in. And I found that it seems like stocks move in a pattern where they consolidate or the price stabilizes, meaning that the buyers and sellers agree that that there's a zone of price that seem like it's fairly valued. And after they stabilize in price, they can move either down or up from there, right? So you can see in this picture that's in my book over here, Trading Around the Cycle, I've created boxes around where price has consolidated momentarily. And then they can decide if they move up or they move down. So once they consolidate, they move up until they consolidate again, and then they change directions again. So if we know that, then we can see or decide when a good time to buy in is, right? If you want to buy at the lows and sell at the highs, then you can decide that you want to buy when price is consolidating at a bottom. And then if you wanted to, you don't have to, but if you wanted to, you could sell when they consolidate at the top. And so that's what we're looking at right now with something like AT&T. Prices consolidate here, right? Consolidate there. They go up, they consolidate again, they continue up here, they consolidate, and then they come down. And that's just what stocks do. And if you can decide that this is what you want to do, then you just have to sit and wait and execute your plan. And sometimes that's the hardest thing to do through stocks or anything that you do in life, right? It's doing something over and over again, finding a pattern and then just repeating it until it works. So sometimes a lot of people feel like they need to trade a lot in the market. And what they do is they trade too much and they blow out, they lose a lot of money. But if they just held in the market and if they just stayed in, they would see that their money just grows over time. And it doesn't do anything except go up if you stay in it long enough. So again, here's the S&P 500. This is our economy pretty much, right? And you can see that we've taken a pretty big dip. But if you look back in the past and you see, here's the pandemic right here, right? Whenever they go down, it creates one of the biggest opportunities people have to make a lot of money in the market. So at the lows of 2020 in the pandemic, since then, it went up about 110%. So from the lows, you could have more than doubled your money if you bought in and then waited. And even where it is now, like right now, you're still up more than 70% over a couple of years ago when the pandemic was happening and the whole world was falling apart. So if that's not proof, then I don't know what is. So right now, the economy, we're in a recession pretty much, right? We're still waiting on the numbers, but you can anticipate that we are probably in a recession. And everyone is calling for pretty much the end of the world right now. But not to say this is the biggest opportunity that a lot of people are going to have ever. Because you can see, if we just take this back again, when the pandemic happened, prices will probably never get that low ever again. So in this moment right now, this is probably the greatest wealth building tool that we have, is the market coming down. And if you can decide to invest in high quality stocks that are going to make it through these tough times, then you can make a lot of money and grow your wealth in the market. And that's exactly what I do. And I just try to go through all of my stocks every single day and decide when they're at stages of consolidation, like what I call stage ones, and when they're at stage twos, which is an uptrend, stage threes, which are a consolidation at the top, and then they fall, which is a stage 4. And I try to identify all these stages every single day, just so I know when a good time to buy is and when a good time to trim some of my shares down. And what's even better about all of this is that a lot of these companies pay dividends. So you buy in at a low price and you lock in your dividend rate. And if you just continue to hold for your entire life, that company is going to continue to pay you forever. So stocks is a great way to build a lot of wealth. and it's also an income stream for you. So what you do on a day-to-day basis, you are just creating and building out an income stream. So that's pretty much all I have for today. Next time, I'm just going to go through all of my stocks and just show you maybe the process of what I'm doing to give you a good idea of how I do it. Yeah, and maybe show you some of my positions and where I'm buying and selling in, just to give you a good idea of what stage ones look like. When's the best time to buy in on a stock. I can tell you about some of these indicators that I have up that may seem really complicated now, but they're actually pretty easy to understand once you just kind of get a good idea of what they represent. So yeah, thanks for all tuning in. Now I'm going to post this video on YouTube for everyone to watch if you missed it, and appreciate you tuning in.